Well, it's looking like right now we're dealing with a lot of the same things we've dealt with on Mondays in the past. Some leverage liquidations taking place, some sell-offs happening in the market. But frankly, it won't matter because, guys, this is our 48-hour warning. This is exactly what happened last year before things started to heat up and get exciting in the crypto market. We're going to talk about all that and more, as well as just a few things going on with SHIB here. So if you guys are new or haven't already, show your support for the channel down below. Hit that subscribe button, that bell. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So it's still pretty early on in the day, but you guys can see it's just a sea of red throughout the space. This isn't really that surprising. And in terms of SHIB, we talked about this yesterday. I will say today we're down about 4.5% after being down about 4.25% yesterday. We talked about if support didn't hold, we could potentially come down to all this cluster of moving averages. And that's exactly what we've done. This is a technically sound retracement across the crypto space. And what we're seeing right now, for the most part, is just some big leverage liquidations across the crypto market. You guys can see, for example, over the last 24 hours, $379 million worth of longs liquidated in the space. There was a lot of long leverage moving up very close to price. And in terms of Shiba Inu, what we've seen us flip to is back to a long short ratio below 1.0. So right now we're at about a 5% imbalance to the short side with still about $240 million worth of leverage sitting here for Shiba Inu. Now, the thing that I will say, and I continue to notice, is that on the short side, leverage is still very separated. And on the long side, it's still very condensed. For example, over the last 24 hours, you guys can see $1.38 million worth of longs liquidated for Shiba Inu. We haven't really been getting days of that much in terms of short leverage. Shorts have gotten pretty comfortable right now, and that's okay because we want them to be comfortable because that is exactly how we can make leverage liquidations to the upside. That's how we can get some of these big extensions in terms of SHIB like we've seen in the past. Now, I will say that unfortunately we got that rejection off this longer term trend here, and that's just fine. I'm not, again, jumping to any conclusions right now because, again, BTC is still just kind of putzing up around in these upper ranges. In fact, here is our longer term trend. This would be a very good bounce for BTC, by the way. If we do break down below here, we could probably see some more red. Excuse me, in terms of altcoins, we could come down and obviously hit our 20 or our 50-day moving average. That's down at about 113.5 or so. Now, understand that US money has not woke up yet. We're probably going to make some more moves even before this video does, in fact, come out. But that's kind of where we're sitting right now. Now, that being said, I keep looking back at this SHIB BTC trend, and I have to say the trend is our friend. Okay, we keep bouncing off of this longer term trend in terms of the bottom. We actually touched this back here on Saturday, and right now it looks like we might be headed down there, but if we do hit this trend and bounce off of it, that's still a higher low, higher low, higher low, like we've been doing time and time again. Unfortunately, we just did not get up to that 200-day moving average like we were talking about on the SHIB BTC chart. But, you know, for the most part, everything seems to be pretty smooth sailing right now. I would expect this week to be a big institutional week. And the reason why is we have rate cuts coming on Wednesday. And I know I've been talking a lot about this. And the reason why is this is exactly when last year the market started to run pretty hard. It's the exact thing that helped take Shiba Inu to some exciting highs. And just to remind everybody of when this took place, September 18th was the first cut. That was right here. That was the start of this big move for SHIB. Then we got all the way up here to November 7th. This was the start of the next leg. Okay, so this led SHIB to do some pretty exciting things time after time after time, except for the December cut. The December cut kind of dropped the crypto market down, and we had run for so hard for so long at that point, we were probably due for some retracement anyways. And it's like I said in my ADA video earlier today, you know, correlation is not causation. And we could frankly do anything off of this move, but I think a lot of this capital that's been sitting on the sidelines in the market, it seems like it's just been waiting for rate cuts, waiting for rate cuts, waiting for rate cuts. And so there's going to be a moment that pushes this down. Now, what I will say here, and this doesn't really mean a whole lot on the USDT dominance chart, but whoa, that was terrible. We can see that we are building an inverse head and shoulders here. So you could, in fact, see a push up in terms of USDT dominance. Maybe this comes via minting. Maybe this comes from some capital in terms of BTC. We'll just have to watch and wait and see how things progress. I will say BTC dominance is back up to about 58% here. Hopefully we're not building an inverse head and shoulders here, but this could be, again, another moment where we get a bit of a rejection off of that 20-day moving average like we've done many times before. the exact thing that has helped continue to make altcoins rally. So we'll see obviously how the day progresses. Again, the big thing I'm focusing on is Wednesday. That's what the market is watching and waiting for. And I think some of these early week trends will be very good indications of what we're going to see. So I appreciate you guys as always. I hope you enjoyed the video. Let me know your thoughts below. What do you think is coming in this next 48 hours? But have a great day. Catch you guys in the next one. Take care.